Hello everyone, welcome to Blue Dragon Actuarial. So I hope you have seen the video on exam and pointers, and before that there was a video on discount rate. So I'll continue with the discount rate after this video, and I'll finish the discount rate. There will be two more parts for which discount rate. One would be market consistent scenario in which discount rate would be calculated, and there would be a relation between discount rate and investment in embedded value calculation. Although embedded value would not be used much in future, but yeah, that's an important topic. So you can expect both these videos to hit this week. However, today's topic is one of the most requested topic, and I think I have got around hundreds of messages in LinkedIn saying that, sir, can you tell us what is the salary of an intern? Can you tell us what is the salary of an analyst, etc., etc. So, I mean, if you are, once again, I would like to reiterate, and I have kind of reiterated this n number of times. But if you are in actually because of some coaching center has told that you will get 1 crore package, it's rubbish, it's foolish, and I have already made a video on that 1 crore package ki sachai, something like that, and you can check out my channel for that. I'll also provide the link in the description. So if you want to understand what you need to do to select actuary as career, I think that video would kind of give you guidance there. However, also I understand that many people have that understanding or maybe misunderstanding what salary is given as per a particular designation. So here I need to kind of try to kind of segregate designation and salary. Is just a estimate based on what my experience is and what I have, and what I've seen my friends or colleagues getting, and also couple of us who are kind of in slightly senior role. They are so I've kind of asked many questions to a couple of my friends, and they kind of also contributed to this. And then one more thing, please don't call me sir or anything. I think I'm call me Arpan. My name is Arpan, and you can call me Arpan. You can call me Blue Dragon. I think yeah, I prefer both of that. But so moving on, Blue Dragon Actuarial salary and designation. I think one of the most requested topic, and I hope this video goes viral. Hopefully that would increase my subscriber base. So yeah, let's move on. So the first slide is related to types of companies. So obviously we know there are three types of companies. One is core, where the company has their own products and they sell their products or services in the market. As for example, HDFC Life, ICICI Prudential, SBI Life. These are the core companies, right? Then there would be KPOs and VPOs, and KPOs and VPOs would be, KPOs are also known as captives, where a company would be situated offshore, like AXA or AIG, and they would be kind of transferring their services to onshore client like India, and they would be here they would be getting cheap labor, but at same or equivalent or probably better talent level. So that's how they work. And the main problem with KPU probably is because it's based on outsourcing, right? KPU stand for knowledge process outsourcing, BPO stand for business process outsourcing. So because it is based on outsourcing, initially the level of work here would be very process oriented, like ABCD, and that's why we see people who are kind of coming from this are not that habituated of using their brain. So they know that I have to run this and do this and do this, and then will get the results. And that's where most of the paper actuaries are kind of related to. But slowly the things are improving, and obviously once some time has been spent, then at least the top performers in KPOs will start getting good work, and once they can retain those good work, obviously it will change. In BPO, it is slightly more more process driven, I believe. As for example, WNS is an example of BPO, EXL an example of BPO. Recently, Accenture has kind of acquired AIG, and I think it can also be put into the BPO setup. So here the work would be process driven, and you need to be sincere enough to kind of get into the details of the process to understand the why of that process. And most people, actually, I have seen that they don't do that. They are satisfied with what work is given to them, and if they can solve that work or they can complete that work, they would be happy. but there will be few who would be kind of digging deeper. And there is no substitute for sincerity. If someone is sincere enough, no matter which company or what type of setup that person belongs to, that person would have the knowledge. And the last would be consultancies, so which would be mainly the big fours like UI and KPMG, Deloitte, right? So these are the companies which will be consultancies. So consultancies would be working across geographies. They might be working with Canada, they might be working with companies in US, in Europe, etc. And they would have an understanding of what practice is going in the market, and that is why they are usually kind of hired. So, for example, IFRS 17, there is a consultancy working with say a company in Canada, and they have applied some judgment there, and they can kind of use that knowledge and pass it on to an Indian insurer and saying that this company has kind of used this knowledge, and probably you can also use the same knowledge here, right? So I mean, that's how consultancies work, and consultancies have more budget because of that, because of the structure they are sort of in, because they are kind of working with multiple geographies, and they are earning in dollars, they're earning in rupees, etc., right? As compared to a core company which is only earning in rupees, and KPO obviously they earn in dollars, or they earn in other currencies as well. But the catch is it has to be low cost, right? Otherwise, if the cost increases tremendously, then there is no need for setting up a KPO. So obviously, out of this, three setup, consultancies have the biggest, budget or biggest money coming their way, because there is no constraint. They are being paid for the services they are offered. And obviously, people who would be in consultancies would be usually knowledgeable people who have some knowledge in a particular area, so that then only they can be consulting, right? And recently, few of the consultancies have moved into KPO sort of setup, which has generated revenue for them. But once again, people would be more, they are the people who would be working more on the process oriented setup rather than the the more challenging or brainstorming sort of exercises. So this is a brief of the companies. I don't want to go into too much detail of the companies, because this is not a presentation on companies or types of setup in Actuary, but it is more of a setup in or a presentation related to salaries, right? Now, moving on to the salary structure. So usually the salary structure is kind of split into fixed, and fixed would be the component that you actually receive in hand, and then there will be gratuity and EPF. So gratuity and EPF would be company's contribution, and an equivalent amount would be kind of, so gratuity is not the equivalent amount is not deducted. Gratuity you'll get after 5 years of service, but EPF, suppose the company is providing 100 rupees EPF. I'm just an example. So 100 rupees would also be deducted from your fixed. So if the company is showing EPF separately, that same amount had to be deducted from your fixed as well, right? So if your fixed is say 300 rupees, then 100 rupees has to, and your EPF is 100 rupees and it's being shown separately. So that means 300 minus 200 would be deducted, right? Because 100 would be given by the company, which you will not be getting in hand, and then same 100 would be deducted. And there will be a variable, which would usually be a percentage of the fixed. And the fixed can be split into multiple components like basic, and there would be house rent allowance and several allowances. So allowances are given so that you can avail tax benefit. Few of the HRs are or the few of the companies are kind of creating better salary structure so that you can avail more tax benefit like LTA, and HRA, etc. And there is a fixed rule like HRA, you cannot just put anything in the HRA. Basic allowance or the basic salary is always taxable, but the remaining allowance, there can be some exemption like education allowance that is mandatory, has to be given, and you can claim some tax benefit if you are married and if you have kids, right? So that's how there are a couple of allowances is there. So what usually our normal notion is, suppose my salary is say 12 lakhs, so I'll get 1 lakh per month. That's not the case. So salary has to be split into fixed, and then you have to kind of deduct this gratuity and EPF, because gratuity you'll get once 5 years of service is over, right? After that you'll get gratuity, and people usually switch before 5 years, especially if you are kind of new to the industry. EPF has to be deducted, and then whatever the salary is left, that has to be divided by 12, and obviously tax will be deducted. So subject to tax, you will be getting the salary. Then the variable component would be paid, after a after year, and depend on the company's performance and your own performance. So suppose your variable is 1 lakh, it has to be multiplied by a multiplier, which will be a company-based multiplier. Say the company has performed really well, and if that multiplier then would be 100. And suppose you have performed exceptionally well, then that multiplier might be 120. So instead of getting 1 lakh, which is your variable component, you will be getting 120. However, the company might not have performed well, especially in during the COVID scenario, or especially in this scenario as well. Many of the IT companies, you must have read that they are blocking the variable, or they are not paying the variable. So if your company multiplier becomes zero, no matter how exceptional your performance is, you will get zero, right? So variable is not something that is kind of scheduled to be given to you. It's not mandatory. But you, in good environment, in time of good economic scenario, you'll be getting probably more than what you are expecting, and if you are a good performer. So all this kind of combined to create CTC. You can see that lot of thought process and lot of understanding goes here. And initially, when I was doing my MBA, I thought CTC would be that, maybe if my package is 9 lakhs, 9 by 12 would be my CTC. That's not the case. That's the misconception that people have, and that's what I wanted to clarify. You people probably think that HR are the people who are only creating rangolis, but that's not true. They are creative there, and they are also creative in salary structure. So yeah, don't underestimate the HRs. Moving on. So the discussion that we are going to kind of consider in this presentation would be related to the fixed package, and I'll not consider the variable, right? I'll not consider maybe the gratuity, right? So whatever the package would be, that would be fixed package. And yeah, obviously and whatever salary I am going to show in the next couple of slides, you have to kind of understand that it is an estimate, and that is based on my experience. And as I mentioned, I've spoken with a couple of my friends and colleagues, and they have kind of given this figure, and they have confirmed this figure. So it can be slightly more or less for different companies, depending on different locations, geographies, etc. But and this is specific to India. Talking about geography, this is specific to India, but there would not be much wide variation, right? But it can be different, right? For few of the designations, some of the exceptional performers might get much more higher package, or much maybe some of the poor performers might get less package. Obviously, if you are staying in a company for a long period of time, and that company is not, there is no say market correction and other benefits are not given, then your package might be lower as compared to a person who have probably switched more. But also, if you are staying in a company for a longer period of time, you'd be more powerful. Like people would know you, and you have a say in the matter. And there are chances that in the next couple of years, you might be promoted, and you would have some portion of responsibility. So these are the designation. Once again, you can see the creative genius of HRs. So they have created this many levels. Usually, it starts with associate analyst. So I'm not considering the interns here. For interns, I have a special mention that I'll be considered, at the last point of this presentation. So stay tuned for that. And interns are not permanent employees. So intern are kind of temporary employees. So I'm just considering the permanent stuff. So usually it starts with associate analyst. Some of the companies also starts with analyst only, but usually I've seen that these days they are associate analyst is the first designation, then it's analyst, then it goes on to senior analyst, then assistant manager. Some people also have team lead, or some companies also have team lead here, right? Then from assistant manager it goes to manager. Some companies also have unit manager between assistant manager and manager. So I mean, HR can go on and create many more hierarchies, right? And HR can also create a flat hierarchy where it can be analyst, senior analyst, and AVP. And but in actually that is not that flat, because even there might be 10 levels in analyst, and there might be 10 levels in AVP. On paper it would just be analyst or AVP, but it can be AVP1, AVP2, AVP3, AVP10, like that, right? And AVP1 might be reporting to AVP10. So it might happen like that. So you need to understand how the hierarchy works, and probably the best way to understand that is to kind of message a person from that company. Otherwise, it's the designations are very, for the lack of better word, can you know can deceive you. Basically, designations can deceive you. And it is, designations are usually created from marketing point of view, saying that if you are manager, as for example, in one of the companies, I have not mentioned the name of the company, but in core companies the designation start from manager, manager one, then manager two, in this way. So you will think that you are manager, but actually that is the starting designation, right? So you have to kind of understand that designations are something that people like to show off, and that's why the HR are smart and they are creating designation like that. So you might think that you are joining a company at manager level, but you are not, right? So the hierarchy matters. That's why probably it's important to ask this question in interview: what is the hierarchy, and at what hierarchy you are considering me? So moving on, so manager, then senior manager, then director. Some companies also might have associate director, then AVP and VP, right? So in this way, it kind of goes. So if we take a look at the salary level, the first would be for associate analyst, it would be around 3 to 5 lakhs. Analyst would be around 5 to 7 lakhs. Senior analyst around 7 to 9 lakhs. And when I'm saying about 7 to 9 lakhs, so the in-hand package per month package would be something around, say, 80,000, 81,000, right? Because there will be some EPF that will be getting deducted. There will be some tax. Assistant manager would be around 10 to 15 lakhs. Manager would be around 20 to 30 lakhs. So here you can see the difference and the range is increasing, right? From 7 to 9, 5 to 7, that the range has increased to 10 to 15. Then 20 to 30, the range is of 10 lakhs. So there can be wide number of people. Like one person can be at 20 lakhs. Exactly, one person can be sitting at 28 lakhs. It depends on the spectrum, how much papers you have cleared, what experience you carry, have you switched enough. So it depends on the n number of factors here. Senior manager would be around 30 to 50 lakhs. You can see a wide range here, right? Because it depends on the experience level, the skill level, etc., etc. What sort of work that person has done, and how much how much the person is equipped to do negotiation with the HR. Then director. So from director level, usually you would be kind of heading a function in KPO. As for example, say you are probably heading the valuation function or the pricing function, modeling function. Right? AVP would be like a couple of directors would be reporting to AVP. So AVP might be, say, AVP for, say, a particular, like, asset liability and risk management. So the director for asset liability and risk management might be reporting to an AVP. And finally, VP would be usually the person who would be the head of Actuary. And it is here that you get a package of 1 crore plus. Otherwise, you can see that you have to kind of work your way up, right? And it's not easy to get that 1 crore package, which the coaching center advertises like it's very easy to get. But and somewhere probably at manager or senior manager level or at director level, you probably have become a fellow in this entire journey, right? So even after becoming a fellow with some experience, you are still not going to get to that 1 crore package. And as per experience, I would say probably associate analyst would have 1 years of work ex. Analyst would have 2 to 4 years of work ex, and in this way, it would it would go on to maybe a senior manager having 10 to 15 years of work ex, and in this way, it would go on. So by the time you reach VP, you are expected to have at least 15 years of work ex. Moving on, consultancy. So consultancies always have the the bigger budget, as I mentioned. So obviously their salary would be slightly higher. So for analyst, it starts from 5 to 7. Then there is a designation called advanced analyst, which is their the equivalent of senior analyst in KPO. So it is 7 to 10 lakhs. Consultant 10 to 13 lakhs. Associate consultant 15 to 20 lakhs. Manager once again 20 to 30 lakhs. Senior manager 30 to 50 lakhs. So here you can see from manager level that the difference kind of goes away between KPO and consultancies. And then from director, it will be 50 to 70 lakhs. Then it would be associate partner, which will once again be a function head, right? And they would get around 70 to 90, and partner can get anything anywhere between 1 crore or above, right? And the in consultancy, it's very important that you can bring business, right? You have a name in the industry and you have done something, and based on your name, people, you have friends in the industry or outside abroad, that they are giving you business. Also the brand name of the company matters. That's why big four are doing the consultancies. You will see very minor small amount of companies who are very small players, and they are also doing consultancies, but they are mostly into the pension sector, doing pension related consultancies, which are kind of mandatory, and they get paid easily, but and they get and those companies who are paying these small companies, they're kind of getting cheap labor. But for life insurance or general insurance, people would like to hire consultancies who have a brand name, because they would be working with number of geographies, and they would have that best practice in place. And although some there are obviously some small consultancies which are doing really well, right? And it still depends on lot on the image the top person has, right? So if you are a good person, if you are not a paper actuary, if you have knowledge, then you can open your own consultancy, and you can help people solve problem. Then coming to the core, so core are Indian companies, and obviously there is an inherent mindset or an Indian mindset that will not pay more, right? We remember that famous ad of that Maruti ad, where people ask kitna deti hai, right? So we are always concerned about the petrol and the mileage and etc. So obviously that mindset is prevalent in core as well, and we'll try to kind of, and because they are selling products in the country, so they would also try to reach that break even quickly. So there the package would be slightly lesser as compared to this two. And also the work pressure is slightly higher in core. So in executive, it starts from executive, which will be 3 to 4. Few places also start from AM, assistant manager and deputy manager. But I mean, most of the places starts with executive, and then there will be senior executive, which will be 4 to 6 lakh, assistant manager 7 to 9 lakhs, deputy manager 9 to 11 lakhs, manager, which will be 11 to 18 lakhs, senior manager 18 to 25 lakhs, a chief manager going from 25 to 35 lakhs, AVP, which would be the, as I mentioned, kind of function head like valuation AVP, or modeling AVP, something like that. And finally, there would be VP, who would be kind of heading couple of AVPs, right? And obviously, I have not included chief actuary here, or the appointed actuary. Appointed actuary would be appointed by IRD, provided that that person, or the eligibility of that person has to be approved by IRD, and provided you satisfy certain condition. You can see my appointed actuary regulation in this channel. You can search for it, and there you can find out what regulations is there, what eligibility criteria is there, why clearing SA2 or SA3. These are very important if you want to become appointed actuary. So that's how it flows. Obviously an appointed actuary would get more than a crore, and obviously these are only suggested figures. There would be few couple of VPs who might be getting 70 lakhs. There would be a couple of VPs who might be getting only 50 lakhs. But in general, the conclusion is that the higher package would be paid for same or equivalent level in consultancies, followed by KPOs. And usually the difference between KPOs and consultants would not be that much, unless you are at a very senior level. And finally, the core would pay you slightly lesser, because you are kind of uh, under that Indian mentality and budget constraint. So yeah, that's how kind of things flows. But slowly it's changing. Obviously, in core you will get to learn at much faster rate. But there are some cultural issues, and there are some work related issues in core, which would not be present in KPO or a consultancies. However, your work would come in projects and consultancies, and at a particular time when there is a deadline, there might be more workload. In KPO, because it is process driven, because it is outsourced, usually that pressure would not be there usually. But different KPOs have different structure, and there will be a couple of KPOs where there will be tremendous workload, and there would not be that process driven role. So in those KPOs, your working would be as similar to as core, but you will be getting paid of a KPO or a consultancy level. And if you are in that sort of company, I think it's the best. You should stick to that company, and you'll be learning something. You will be using your brain. You will not be doing a process oriented role, and you will also be paid for the same. Right? So that's very important. Finally, special mention for the interns. So as I mentioned, internship in core would be somewhere between 15 to 20,000. These are the stipend they get. Internship in KPOs would be around 30 to 40,000. And here I've distinguished between KPO and BPO because based on the experience or the feedback that I've got from my friends, the interns in BPOs are paid slightly less, which will be 20 to 30,000. And if you are an intern in consultancy, you'll be getting around 25 to 35,000. So core would be slightly lesser, and the KPO and BPO would be more or less in the same range. And I mean, I was told by one of my friend who's an intern in one of the companies, the core companies actually, that intern do not get salary or stipend, and I didn't know that it can be claimed for tax benefit as a reimbursement, because this intern service is kind of taken as like you are I mean, you are not paid salary, so it can be claimed as an reimbursement. I am not very confident about this part, so please consult. If you are an intern, I think there would be a tax benefit that is there, and you can consult any tax advisor or CA for the same. But I am not an expert to say about him, say anything about that. But might be there is a tax benefit that will help you, right? So you can claim that tax benefit if you are an intern. And obviously, internship are usually for 6 months. It can also be extended to 1 year. After that, you may or may not get confirmed. Obviously, if you get confirmed, your package will increase, right? Obviously, as a permanent employee, you'll receive several other perks as well, like the Mediclaim and etc. etc. That I have not considered here. Some people also consider those as part of CTC, and that's why it is very important to understand that your salary is not only CTC. Your salary is what you get in hand, which would be the fixed, right? If the medical insurance is included in your CTC, then it is unnecessarily inflated. So you have to kind of understand how your salary works, and then you can probably come back to this presentation and see if this is the range that you are getting. Otherwise, there you might be paid less, and you need to kind of work for it and work towards it. So I believe if you like this video, please share this video, because I think sharing this video is important, because there are a lot of misconceptions in the market, and if you share this video, a lot of your friends will be benefited. And please like the video if you think that this content was knowledgeable. Please make this go viral, and yeah, subscribe to my channel, and thanks for watching, and see you in future videos.